Thursday, November 17th, 2022, Maneco 64, home of alternative economics and contrarian views. So the bond markets look very interesting. They're flashing warning signs, in my opinion, about what could happen to the economy, to monetary policy, and the financial markets. Of course, it's very difficult to say exactly what's going to happen, but things seem to be topsy-turvy, I would say. We're going to look at that today. Before we do, though, a little bit on my business trip to Zurich. Yeah, it was very busy every day. I met 21 different companies, one-on-one meetings with sometimes CEOs, and they lasted about 25 minutes. So I did get small breaks in between, but not too many. The only person I was able to listen to keynote speech was at the end of the conference. I listened to Grant Williams from Things That Make You Go, and he's very good. He gave a very good presentation, and he thinks that trust has been lost in everything, not just the markets, but our leaders, all institutions. And he said what I've been saying. Things are going to get more real, and that means more attention to commodities, precious metals. And I'll talk a little bit more about what he said later on. And the company that stood out to me, and quite a few stood out, but especially the one that I remember well, is one called EMX Royalty. It's a royalty company, and I wanted to meet EMX because I've done a video about gold royalty and Corp. And actually I got to meet the CEO, and he was quite impressive, and I was impressed with him and the company. Is this financial advice? Am I saying that you should buy EMX? No, I just thought it was, they've got a very good track record. They've been around for a long time. And he actually gave me this. It's 100,000 bolivars from Venezuela. And on the back of it, he's got his business card, as you can see here. David Cole, CEO, President and CEO of EMX Royalty. And he's very knowledgeable, not just about the gold mining space and royalty, but also what's going on macro-wise. So maybe one day we'll have him on just to have a chat, because I think he was quite interesting. Before we go further into the bond market, just wanted to say one thing about FTX, and I'm going to put a link in the description below and a link in the cards above. I did a video or interview with, or live stream really, with Nobody Special Finance the day after everything unraveled. So I don't think much of my views have changed since then. You can dig into all the details and all the connections between SBF and Chancellor and MIT and whatever, but I think the thing to take from this, in my opinion, is counterparty risk and trust. You see, that you got to be very careful. You need to really do your due diligence. You need to sit down sometimes, like I did with Dave Cole from EMX Royalty, see the person face to face. Of course, we can't all do that, and I was fortunate to be able to go to this precious metals conference, and I have to thank you for that, because if I didn't have as many followers, they probably wouldn't have accepted me at the conference. But yeah, that's the thing: counterparty risk, trust, and that's what Grant Williams was talking about as well. Trust is lost. And the other interesting thing that Grant Williams said was, if you see something that doesn't look right, you need to trust your gut and your instinct. And he gave the analogy, of course, of the little boy who said the emperor has no clothes, and all the adults are saying, what are you talking about? So back to the bond market. Many of you, of course, know I worked in the bond market for over 20 years. It was my core business in the city of London. I was a futures and options broker in the government bond market for institutional investors. And it's one of the reasons I started this channel. I wanted to talk to the public as if I spoke, like I spoke to my clients every morning, give them a rundown on things and what I thought. And a lot of them were interested, of course, in what I had to say. And they did business with me because of that. I wasn't just telling them to do this and that. I was just telling them my opinion, and it helped them make their own decisions. So, and bond markets, of course, can be complicated for the layman because the first thing people always ask, why do yields go down when prices go up? Well, and I've spoken about that. And I'm going to put some videos that I've spoken about that below in the description and up in the cards. But today I wanted to talk about the yield curve because it's giving some signals that we haven't seen, for example, since the whole COVID situation, the COVID recession, as Tavi Costa says here. So Tavi says, he's from Crest Capital. More yield curve inversions happening today. The Fed funds rate is now higher than 30-year yields for the first time since the COVID recession. 62% of the entire Treasury curve is now inverted. This only supports our bearish case for U.S. stocks. So there's the inversion there. And the other yield curve that I noticed that has done something for the first time since 2008. And we all know what happened in 2008, or most of us do, of course, the great financial crisis. And that is the German yield curve, 2s, 10s for the German government bonds has gone inverted for the first time since 2008. So that's another bad sign for Europe. But I would say for the whole world economic system. And another very interesting situation in the bond markets is to do with the spread. And this is the spread between the treasury yields and mortgage rate yields or mortgage rates. And I have to thank Rafi Faber. Yesterday he spoke about that. He talked about how the 10-year yield, treasury yields versus the 30-year mortgage yield, it's the most inverted that it's been, or not inverted, but the biggest spread that it's been in a probably never seen such a big spread. And what does that mean? Well, it means that the big Wall Street banks, big institutions, financial institutions, they don't feel safe lending money to the general public. They don't feel safe in giving out mortgages, but they feel safe in buying treasuries. And why is that? Well, because I think they feel that something's going to happen. Something's going to crack in the system, and the Fed is going to have to come in again. Don't forget, in his last press conference, Chairman Powell said, if something were to happen like during the pandemic, he said, we have powerful tools. What's the powerful tools? Well, as usual for central bankers, it's more money printing, cutting rates. So that's probably what the bond market is doing here, not just through the yield curve inversion, which is usually a sign of an imminent recession, but also the spread between U.S. treasuries and mortgage rates. Yes, they feel more comfortable being long treasuries because they think that the Fed is going to come in and start buying again and probably stop QT. So that's what's going on out there. I can't tell you exactly what's going to happen, but it doesn't bode well for things. And yes, this is an environment, I think, where you're trying to protect what you have, not make a killing. We've seen what's happened to people who tried that. FTX, case in point, and there's a lot of other crypto companies now that are in trouble. They've stopped withdrawals. I think Genesis is the Winklevoss brothers. And yes, I am aware that Bitcoin is different. Bitcoin is a little bit like, I'm not going to compare it like totally to physical gold, but Bitcoin is supposed to be something that you hold in your private wallet. What we're seeing in the crypto space right now is not really to do with Bitcoin, even though a lot of the speculation, leverage, and greed in these exchanges has flowed into the price of Bitcoin. Yeah, it's more to do with these exchanges, the greed. It's nothing to do with the concept of blockchain and decentralization. So there you go. Yeah, so now we're going to look at the markets. We're going to look at gold and silver, of course. And just before I look at the markets, there's one thing I forgot today for the UK. This is quite important. We have Jeremy Hunt, the new Chancellor. He's going to give out a statement in Parliament, in the House of Commons. It's called the Autumn Statement. Basically, the budget that he has. He's going to, market is expecting a very tough, austere budget. We're going to see cuts in the government and higher taxes. I think it's already pretty much discounted in terms of the fact that the cable or sterling has risen quite a bit the last week or so, on a mixture of weaker dollar and maybe the markets being more comfortable with what the UK is doing. So I think actually when he comes out, we're going to see maybe a sell-off in cable, because it's the old adage, you buy the rumor and you sell the fact. But thanks again to Rafi Faber, he noticed something that I hadn't, and it's to do with UK M2. It's grown the most since the pandemic, as you can see here. Money supply M2. Like him, I don't know what's going on here, but could the Bank of England be doing something through the back door to keep things going? And if so, that's highly inflationary. This is inflation, people. So I don't think it's going to get better in terms of rising prices. We're seeing food prices go through the roof in the UK, which is not a good sign in terms of currency rectitude. It means our currency is being debauched. And this is another sign of that the Bank of England is playing with a hyperinflationary fire, so to speak. So, yeah, so we'll start with gold and silver. So what time is it? It's 8:15 a.m. London time. And I just show you a tweet from Michael Berry. He was the main character in The Big Short. Sometimes he deletes his tweets right away, but he tweeted this out. When was it? The 15th of November. And he said, long thought that the time for gold would be when crypto scandals merge into contagion. So that's quite an interesting comment there. And wanted to show you these two charts by two different analysts that show that silver is actually not just undervalued versus the dollar and other currencies, but also versus commodities in general. So this one is by Stefano Bottaioli. He's on Twitter if you want to follow him. And this looks very bullish for silver in terms of the CRB index, which is a basket of commodities Research Bureau index. And it looks like silver has found the bottom versus commodities. And if silver does well as well versus commodities, it means that gold will be doing well because they both move in tandem usually. And then we've got Tavi Costa. He's kind of seen the same thing, but he looked at it differently here. He's looking at it versus the S&P GSCI, Goldman Sachs Commodity Index. Silver has so much catch up to do. It's likely headed a lot higher from here. The cheapest metal on earth, silver versus commodities. So just wanted to show you that. So now we look at the markets. So we got spot gold, 1770 is down about $4. High's been 75, low has been 1761. And it's interesting that a few weeks ago where the handle was 16, let's not forget that. Silver is at 21.28, is down $16, 0.75%. High's been 52, low 21.08. I think that 22 level right now, it looks like the key level the last few days. Every time we get near there, it gets slammed down. So keep an eye on 22.00. To the stock markets, the Dow futures is up 124, 0.33%. The NASDAQ is up 80, about 0.75% higher. And the S&P is at 3980, so below 4,000. It's up 0.5% though. To the currencies, we've got sterling approaching 120, and it's another sign that things are not well when currencies that are supposed to be hard currencies trade in such a wide range. Recently, 2 months ago, we got down to 103, and we're back to almost 120. It's up 0.25%, 119.50. The euro is up slightly at 104.00. The dollar's down a third versus the yen, 138.98. Dollars down slightly versus Swiss, 94.37. And the dollar is up 0.25% versus the yuan at 712.40. The dollar is down slightly versus the ruble at 60.50. And yeah, the ruble in Russia. What do I think about what happened in Poland? Yeah, I'll just give you my opinion. I think the Ukrainians, it's difficult to say whether they did it on purpose or whether it was a mistake with that missile. And it's not me saying that it was the Ukrainians. Even NATO and Poland have come out now. Were they trying to create like a false flag and blame the Russians? It's very probable. And what does that tell me about the situation for Zelensky and the Ukraine? It tells me that they're desperate. So there you go. Let's continue with the other currencies. We've got the Aussie dollar unchanged, 67.44. We've got the dollar down an eighth versus the loonie, 133.10. And we got the Kiwi dollar up a quarter at 61.62. General commodities, WTI crude is down 0.5%, 84.60. Brent is down a third at 91.80. High grade copper is down 0.5% at 3.75. And US nat gas is up 2.5% at 6.61. The Dutch TTF natural gas futures, that's down about 8%, around 105. And we'll finish off with the bond market. So we've got the 10-year UK yield almost down to 3%, which is quite amazing, I would say. And it shows to me that there's some backdoor intervention here, because we had CPI at 11.1%. and the 10-year yield is like 3% almost. I smell intervention here. Maybe that's why the M2 numbers are growing like this. Anyway, it's down about 2 basis points. I think the markets are giving this new government in the UK too much credit. to be honest. 30-year is down 1.5 at 330. To the U.S. Treasury market, so we've got the 10-year yield continue to come off. Well, actually, it's pretty much unchanged overnight. It's around 369. You had the 2 years at 435, so huge inversion there. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day. Take care. Bye.